Welcome to another S&P Futures day trading recap where I'm showing all my Apex account balances for full transparency. I'm also copying all my trades onto a TradeDay evaluation that I'll be providing an update on at the end of this video. Apex's 90% sale is back. You can use my coupon code to take advantage of this sale that ends on November 7th. When price started dumping hard this morning, I identified price to be always in short and looked to fade any attempts to reverse the strong bearish momentum, so I entered with a limit order at the top of a doji bar. Just as expected, price resumed plummeting shortly after my entry, and I decided to size into my winning position with a stop order at the bottom of the retracement bar. When price makes a new low, I decide to exit the trade at 1 times my actual risk. Al Brooks recommends going for at least 2 times actual risk, but as you can see, I had all my PAs on the copier, so was a little more leveraged than usual, and was just happy to have a relatively stress-free trade to start the day. When price gets some decent displacement upwards, I see my LFG setup form, where a minor liquidity pool resided right around the 50% Fibonacci retracement level. I was ready to add another contract further down if it retraced further, but it never did. My first entry was spot on, and I barely have any drawdown before price starts resuming the short-term uptrend. I initially wanted to target the most recent highs, but I actually wasn't super confident about my long thesis because of how strong the morning dump was, and the 5-minute chart was looking more and more like a bear flag, so I decided to exit early and lock in another win. Sure enough, the bear trend resumed, and price continued plummeting in the afternoon session. When it looked like price was trying to reverse the bear trend again, I identified another LFG setup when a liquidity pool formed around the 0.5 Fibonacci retracement level. After a steep rejection off this 0.5 level, I began to suspect that my liquidity pool entry might not get filled, and I decided to have a more aggressive entry short as a starter position and plan to size in at the liquidity pool if price did retest that level. My aggressive entry gets rewarded as price continues dropping. This time I decide to exit at 1 times my initial risk on this aggressive scalp entry. With only one MES contract, this was another small win, but even these small wins add up when copied across all my PAs. So up to this point, things were going great. I won 3 trades in a row and started feeling a little overconfident in my trade biases that have been on point all day. Won't go into detail on these next few trades because I ended up breaking even after some drama, but we'll quickly summarize what happened. I started with a solid short trade where I hit my 1-to-1 profit target and took profit on half my contracts. I decided to let the other half try to run to 2-to-1 reward to risk, but my runner got stopped out from some pretty bullish looking candles, which made me instinctively decide to jump in long. I generally try not to make impulsive entries, but again, I was feeling overconfident, and when price continued to pump up, I decided to raise my profit target and even size in when it retraces down. Once again, I get stopped out by some very bearish looking bars, and I kick myself because my original bearish thesis was correct, and it looked like my original short runner target was going to get hit. I think at this point, I started to go on tilt, and once again, I make another impulsive entry short. When price seems to start retracing back upwards, I aggressively size in until I was up to 4 contracts short. My stop loss was still very far away, and this was honestly terrible risk management, because if price did start shooting upwards to stop me out, I definitely would have hit my max daily loss on all my accounts, which would have been brutal. Thankfully, price continues to chop its way down, and I'm able to take full profit at the most recent pivot lows, to bring my account balances back to where they were before I started this irresponsible scalping spree. Definitely not proud of my risk management here, but I'm showing all of it for full transparency. Here's a summary of all my trades today. As you can see, things got a little crazy towards the end of day, and I'm seriously glad I took profits where I did because price started rallying during after hours from mega cap earnings. Close calls like this one is a great reminder of why risk management is so important. Al Brooks has a general 60-40 rule, where he suggests that at best, there's a 60% chance for the market to swing in your direction. And so no matter how confident you are in your setup, you have to be prepared for it to go against you. Would you risk your entire account on a trade if there was a 40% chance it will fail? Maybe some people would, but I think most people, including myself, would absolutely not. Of course, the reward to risk ratio of your trade also affects trade probability, but I think this 60-40 concept is a great rule of thumb to remember not to be overconfident that the market will do what you need it to do. This is something I absolutely need to keep in mind when trading these accounts going forward, especially because of how leveraged I am with all my accounts on the copier. Nevertheless, here's my TradeZella summary for all my Apex accounts. You may have noticed that the 2 accounts that were pending withdrawal are now back on the copier because those withdrawals were finally approved. I have officially withdrawn $2,000 of profit from this batch of Apex accounts, and will continue to track total withdrawals going forward to motivate me to continue working hard to make even more withdrawals. I'm pretty close on a few more accounts, but we'll try not to rush the process. A lot of my success thus far has been from sizing down to micros. The 2 big red days from last week were actually from oversizing trades on my 50k accounts, so absolutely don't want to make those same mistakes again. Here's a quick update on my 25k TradeDay and Apex evaluations that I've been using a trade copier to take the same exact trades on. My TradeDay account is up to 25,664 with the entire $1,500 trailing end of day drawdown to work with. Every green day guarantees the entire drawdown threshold for the next day, which I think is really great for trader psychology. My Apex account is up to 25,719, and the trailing max account drawdown is almost the full $1,500. TradeDay does have a more favorable drawdown mechanic, but its commissions are also higher, which is why my Apex account is slightly higher than my TradeDay account. Still, both are in great shape, and we're nearly halfway to the profit target, so hopefully I can keep it up. If y'all want to start your own evaluations with Apex or TradeDay, you can use my affiliate links in the description and use my coupon codes for the best available discount. As always, thanks for watching. Please leave a thumbs up if you enjoyed, and subscribe so you're notified of the next time I post a trade recap. In the meantime, I'll continue posting daily profit and loss updates in my channel's community tab.